the current situation with real estate in the future. It's a little bit of a unique market in some regards, like interest rates have gone up a fair amount,
Yeah.
and then prices have gone up as well, especially some of these desirable areas. And so it's made some of these calculators, like if I'm running the typical calculator on a rental property,
Yeah.
it's become a lot harder to make my calculator work
Yes.
lately. Especially I feel like as an investor wanting to get into it, it's become almost like a hurdle for me if I was already a little gun shy, and I'm like, oh.
Yeah.
So I'm curious of your thoughts on that.
Yeah, absolutely. So everything you talked about is 100% correct, Daniel. We're in a very different environment than we were in 2 years ago. Interest rates are super high. So transaction volume is super low because people have locked in interest rates at like 2,
Yeah.
3%. They're not getting out of it. And that is causing that what that's doing is that it's keeping prices elevated and not letting them drop, right? So between the high interest rate and the high prices, if you're looking for a turnkey rental that's going to cash flow, you're lucky if you find something that breaks even in a really good markets. And so our strategy has to shift in these times. And so within our program, we're constantly coaching, people are constantly acquiring. What we're doing is I look at it as three different things, right? I would say what we're buying is different. We are trying to buy properties at some discount if possible, right? A little bit of discount. So in most markets, prices have reset between 10 to 15% between the peak that we saw last year. And so there is a little bit of discount over there. You want to buy for the long term. This is what we just talked about. And you want to buy something that is cash flowing. That's the most important thing. So being really intentional and then picking the right market. If it's short-term rentals, regulations, you really want to be careful about what you're buying because it's not a time where you can buy anything and you're going to do well. The next part is going to be, how do you ensure you can hold this property? No one has a crystal ball, and there's a best case scenario, there's an expected reasonable case scenario, and a worst case scenario. I think we should all plan for worst case scenario because the other two scenarios don't really matter. You're not planning for it, right? And so that can make you feel better, but it's really useless. So in terms of can you hold a property, this is where I say use the calculator, stress test all your deals with short-term rentals. We're dropping the average daily rates by 10%, we're dropping occupancy by 10% and seeing if those numbers still make sense because you don't want to be feeding these properties. With long-term rentals, drop your rents by 10% and see if you can sustain it. Will that happen? It may not happen. We may have a soft landing. That's more likely just with the way things are. But we are always planning for worst case scenario, right? And the final part is what I like to talk to investors about. So we don't have control over what market prices are going to do, right? That's something that's completely out of our control, but that's just one factor of real estate investing. So if you can find ways to increase your cash flow, for some people that is doing midterm rentals with taking a single, we have members in our community who take a single family home for 400,000 that they could rent for 2,500 as a long-term rental, and they furnish it and they rent it out for 7,500 to $10,000, right, as a midterm rental. And so they're tripling their cash flow with that strategy, and it's not as time intensive as short-term rentals. There are others who will buy a short-term rental and get higher returns by doing that. And then you can go in and rehab something, right? Find something which a first-time home buyer, like I got a property a few years ago where I got it for $360,000. First-time home buyer wouldn't touch it because the carpets needed to be changed. The appliances were all shot. I went and I put in 15 grand. That's it. Completely redid the whole place, got countertops changed. So it was only 15 grand and the property value went up by $100,000, right? So those are the strategies that you can do where you need to be a little creative, think outside the box, and then tapping into those tax savings, right? That's something. Doesn't matter what the market does in terms of pricing, as long as it's based on what you acquired the property for. If you're tapping into that, that gives you a buffer, right? So you have all these other additional things that you can do, where I think it's a time where if you're willing to buy long-term rentals and have it break even and write it out and then refinance when rates go down, that's probably the only way you can get turnkey rentals. You could try different markets. Some markets tend to cash flow better. So hybrid markets tend to do better in terms of cash flow. The Midwest tends to do better in terms of cash flow. So for someone for whom cash flow is really important, you may try different markets, or you shift your strategy and then you tap into additional savings. So that's what I usually like to say. Okay, be intentional about those three key components. What are you buying? How can you hold this property, and still have it sustain itself, and then control the things that you can control, because there's so many things you can. As long as you have a longer term strategy, prices will reset. And like I said, revenue doesn't really drop as much. And so all you're doing with your stress testing is factoring in the 10% drop that typically happens during recessionary periods.
Yeah, good stuff.